The Greek stock market endured the biggest drop since 1987 this week. Now, the 11.2% slump was caused by a shock announcement by the government to hold a snap presidential election to reduce support for the anti-austerity opposition party, Syriza. Now, Syriza represents Greeks who are still bitter about the harsh austerity which they view as being forced upon Greece to stay in the Eurozone. Now, if the current leader, Antonis Samaras, gets the votes he needs, then the country will continue with reforms and austerity. If not, Greece could potentially exit. So to discuss both of these scenarios, I'm now joined by Athens-based lawyer and economist Nick Skrekas. Nick, we had you on the show exactly a year ago to date, and it's interesting that we're now going to talk about the Greek economy and the issues that are still plaguing it today. Has anything changed? Because just this week we have the stock market plummeting by the most in 27 years. What does that tell us?
Well, Katie, it tells us that Grexit risk, the risk of untimely and messy exit from the Eurozone, is back on the table again. But other than that, many things have changed in the sense that the structural reforms that have been implemented have been very good. The privatization efforts are also very positive. But there is still the issue of an unsustainable total debt level that hasn't gone away. And we are haunted by political instability, which has been created at least 5-6 years ago and still looms today. This particular issue for the stock exchange to crash and for Greek bonds to be surging in terms of yields that need to be offered has precipitated because of the need to elect a new president. And that requires a supermajority of 180 deputies out of 300. At the moment, the government seems to only have 155 in its own ranks and probably another 15, but it's well short of 180. And if that's the case, and the last vote is on the 29th of December, we will be going to elections. And because we will be going to elections, the leading party appears to be far left-wing Syriza. And they have made all sorts of different statements because they have 13 different sub-branches within their own party, some saying that they may unilaterally haircut the debt, and some saying completely different things. We've seen the leader trying to round off on some of their policy announcements, but we really don't know what is going to happen if they take power.
Well, could potentially, if they do take power, because they are anti-austerity, could we see an exit from the Eurozone?
Absolutely, there is that risk on the table. They are denouncing it. They are saying that it's scare tactics from the Conservatives. But I think the market is putting its money where its mouth is, in the sense that credit default swaps are currently predicting a 26% chance of Greece defaulting on its debt and exiting the Eurozone.
And what would that mean?
It would mean that Greece would have to go back to its own drachma. It would mean capital controls for incoming and outgoing foreign exchange, which could eventually lead Greece out of the Eurozone altogether because it requires the free movement of capital and goods. Further along the line, you would have an inflationary spiral in Greece because things like the price of oil would not be denominated in euro but would be denominated in drachma, and of course it would cause hyperinflation here with all sorts of unpleasantness and employment continuing on its very high upward trend. It would cause massive poverty.
Nick Skrekas joining us, international lawyer and economist, joining us from Athens today.